So part of today's move is to think about the transmission mechanism into financial markets.
In which case, we say that the bank is, as Brian said before, loudly asking for interest rates to fall.
Well, no, the bank has said here's a 50 basis points cut. We'd expect competition to determine what happens to that, but there is quite a bit of room in those. And we do have a general view that we want to see monetary policy conditions loosening, not just at the wholesale policy level, but we'd expect to see some of that reflected through.
Would you entirely accept what the banks are saying about increasing spreads for the imported share of their funding? That's what you're trying to lean against here, is that?
Yeah, I mean, we expect them to make up their own mind. We cut by 25 basis points last time, and we got quite an amount of mortgage rate cuts, but not entirely across the board out of that. We'd expect to see a response this time as well. We don't particularly expect to see stickiness in these rates on the downside, and in particular we don't think that we will suffer the problem that the US has been suffering, where the Federal Reserve has cut their reference rate very significantly, and until recently very little of that has been reflected through onto retail rates for credit reasons.
Floating rates didn't fall after July. Were you disappointed after that floating rates haven't come down?
We haven't taken a particular view on that.
Would you expect floating rates to fall now?
Again, we've got a track of 90-day rates that you can see. It would be consistent with that, but most of our mortgage lending isn't done off floating rates, so floating rates aren't as important here in that sense as they are in Australia.
They are for distressed borrowers and for people who are trying to wait between refixing. I mean, if interest rates are going to fall, people want to move on to a floating rate temporarily, perhaps. I mean,
Well, I think you might be looking for more precision around a monetary policy tool than there actually is. We'd expect the market to take this into account, together with all the other funding costs, to reach a view about how they'd price across the curve.
In terms of it says that, you say in your statement that you're still expected to remain contractionary for some time. For how long? And do you want that, or would you prefer it to drop out of being contractionary as quick as possible? I mean,
Well, we think we are mildly contractionary for some time. We don't need to say yet just how long, because it depends on some other factors as well, in particular where the exchange rate goes, and in particular where medium-term price pressures go. That's why we don't try and construct something that is very precise about that. However, we could go through a number of cuts yet and still be either neutral or a little tight because of where we currently are.
Do you think that the personal tax cuts next month are coming in the nick of time, considering the downturn?
The personal tax cuts timing is roughly does roughly meet a trough in household consumption. So in that sense, it's helpful to stabilise household consumption. We have always just said, well, that's one of a whole bunch of different things happening. But the timing from that works quite well, and possibly better than had been expected when some of those things were originally designed.
Some accusations out there that they think that by this move that the bank has gone soft on inflation?
Oh, well, it only happened, Patrick, 5 minutes ago, and I get a lot of fast criticism, but I haven't been picking up through the airways that yet.
Criticism then that the Reserve Bank may be seen to be soft on inflation.
Well, are we soft on inflation? We don't think so. We think we've been absolutely consistent on this because we are focused not on inflation today. We think, as I just said, that inflation today could be around 4.9%. But we can do what we like with the OCR today. It doesn't impact that at all. It impacts the medium term. So we have kept our focus on the medium term. That's roughly 18 months to 3 years out there. At that period, we do come back in on track. And while some of our forecasts haven't been right through this period, and I'm afraid that's been an international phenomenon, we have always been focused on that medium term point. And we still are, and that's the only thing that can allow us to cut rates now. We, of course, look at the makeup in there There's non-tradables, and the non-tradable side is usefully coming off and has been for some time, but off still high levels. The tradable side, of course, is coming off, but as you know, that's very volatile depending on the exchange rate.
How much of a concern is the level and the trend in inflation expectations right now? It seems to be
Yeah, well, I mean, that is a concern. We do take that seriously. We get a bunch of data on it, but we put a lot of attention on the 2-year surveys. We put more attention on them than I think most central banks do. That's partly because we don't actually get the value out of some of the market data that they tend to, where they have deeper markets that they can pull out information on this on. But we do still take that seriously. Now, it's been pushing up, but very gradually. It's been pushing up in the context of one of the biggest price shocks we've ever had in New Zealand. So, of course, it was going to go up. I guess we have concern for the future numbers on that. We'll watch them tightly. On the other hand, we have some comfort we've taken that has stayed reasonably restrained. Incidentally, the numbers are somewhat similar to inflation expectations numbers in Britain and the States as well. And we're all watching one another at the moment because this is a different cycle. It's a cycle when financial issues look quite difficult. Housing has gone through a real boom bust, but the labour market doesn't look like it's too badly affected, and inflation expectations have stayed more anchored than I guess many of us might have thought.
Dr. Bollard, you're expecting quite a bust in the housing market. How severe are the shocks from that likely to be?
Well, we think we're halfway through it. It's behaving pretty much as we've thought over the last couple of months. It's a lot better than, for example, is happening in the US, where there's, as you know, some very poor issues in funding, and there's a lot of negative equity and people walking away, and they can't see the trough coming up, and that is a real concern for us all. That's not the case in New Zealand. In New Zealand, we believe from a number of independent variables now that we can see a trough around the end of this year, start of next year. But that means we're not there yet. We've had a price reduction of we're expecting a nominal price fall of 15%, and we're only a little halfway into that. You get similar reductions in transactions and in new investment and so on also. I guess it's a real retrenchment, but it's a well-behaved retrenchment.
Are you expecting a rapid rise in mortgagee sales? Because things are going to get worse before they get better, aren't they?
Well, there will be a significant rise in mortgagee sales, but we're not expecting another thing that's plagued the United States, which is households with negative equity walking away from their homes. It just isn't likely to happen here.
Any thoughts on the kind of scale of forced sales?
No, we haven't. A view on that. We talk increasingly to the banks about that. We believe they've got that well under control. These numbers will be rising, but from historically very low levels.
In terms of the effective mortgage rate, though, that's still going to rise a little more before it starts tailing down, isn't it? I mean, things are going to get worse before they get better, effectively.
It's expected to be a small increase in the effective mortgage rate over the coming months, but it's less than what we were previously expecting. And the marginal rates that new mortgages are going out on, we expect those they've already come down, and we'd expect further reductions going forward.
So household